Jason Andrew is one of many homeowners who are now facing rising mortgage repayments.
It does certainly create some uncertainty and potentially some anxiety for us. We're probably the first generation that hasn't seen real interest rates increase.
Jason and his partner are on a variable mortgage, and a rate hike comes as they prepare for parenthood.
We're into that new phase of life where we have additional costs as well, so it's interest rate rises combined with childcare fees, school fees.
The Reserve Bank hasn't raised the cash rate in more than a decade. It's been at a record low of almost 0% during the pandemic, and now it's going up to 0.35%.
It's not unreasonable to expect that the interest rates would get back to 2.5%.
The RBA Governor says the board had to act to try to get inflation under control, which he says will stay for a while.
Our central forecast, which is that underlying inflation will decline to the top of the target band in 2024.
Prices are surging on everything from food to fuel through to building new homes. Economists say with inflation above 5%, the board made the right call.
What this does is it slows down the spiral effect where lots of people buy stuff at the same time and then that stuff gets much more expensive over time.
Adelaide Timbrell expects the RBA to hike rates consecutively in the coming months.
So we think that by the end of this year, the cash rate will go from its current 0.35 to 1.25. And then by May next year, we'll see it go up even more to 2.25%.
The initial hit to borrowers will vary. It will all depend on whether your bank passes on the full rate hike to you. The rate rise will add $78 a month to an average mortgage on a variable rate. This will soar to $615 a month this time next year if the cash rate hits 2%. Those with bigger variable loans will be hit even harder, including Bashir Naim, who's building a new home for his family.
With the last few years, all you hear about is rates dropping and the government encouraging people to buy and the housing market booming, and now it's sort of the opposite. From our point of view, with the cost of building being very high, it hasn't come at a good time, I suppose.
Many Australians, like first home buyer Kelly Lehmann, fixed their home loans during the pandemic.
With the market the way it is, it was just sort of inevitable, and I was trying to scrounge as quickly as possible to refinance.
Her repayments will stay low for now, but she faces a much higher rate when her deal ends.
I can definitely see that being an issue coming, the end of my 2-year stint of being locked in.
Not everybody's unhappy about the Reserve Bank's decision. Savers have been waiting a long time for this moment.
Oh, I want them to go up over 20%, like they did 3 times in the 1980s.
With deposit rates so low, Grant Agnew's nest egg has been doing little in the bank.
There has been cash coming in, but a minimal amount. It's been very difficult.
For the next generation, the purse strings are also tightening.